Hi students. So this lecture for BBA second sem on corporate accounting. In the last class we saw the theoretical part which is related to the super profit method, and we saw the related the problems also. Now in this super profit method it includes the methods which is the purchase super profit, as well as the sliding scale evaluation of super profit method, and the annuity method of the valuation of super profits, and the capitalization of super profit methods. These are the important methods of valuation of goodwill under the super profits. Okay, now first one, see, which is the purchase of super profit method. Okay, so the purchase of super profit method means what? The super profit is multiplied by number of years of purchase of super profit based on the assumption that the super profits expected to be earned in the future is nothing but what the what's the super profit purchase of super profit method. Okay, so in this methods, how to calculate the value of goodwill? The formula is there. The value of goodwill is equal to what? Super profit multiply number of years purchase, you will get the value of goodwill. Okay, so next one is see the B, which is the sliding scale valuation of super profit method. So this is the second important methods under the super profit method. So this C, under this method the amount of super profit goes on decreasing year by year, and after a fixed period it will disappear is nothing but the at that time it's using this sliding scale valuation of super profit method. Okay, so this method of valuation, no, the goodwill is a slight variation. Okay, the goodwill is what's the slight variation of the purchase of super profit method. Okay, so actually this method is based on the general theory that if the super profit is higher, it is very difficult to maintain in the future. At that time it is a sliding scale method is the using. Okay, so under this the we will see problem related this. Okay, so now see the problem. The following are the net profits of Manju Company Limited after providing for income tax for the past 3 years. Okay, so these are the 3 years profit is given. For the 2013 it's a 2,45,000, for 2014 it's a 2,80,000, and for 2015 it's a 2,62,500. Okay, so as well as in other information is also given. The average capital employed in the business is rupees 15,75,000. The normal rate of return expected in this type of business is 10%. So it is also expected that the company will be able to maintain its super profits for the next 3 years. Okay, so according with the help of this information, no, so calculate the value of goodwill on the basis of A, 3 years purchase of super profits under purchase of super profit methods, and B, the dividing the super profit into three divisions and multiplying each of them by 3, 2 and 1 respectively under sliding scale valuation method. Okay, so whatever this information is given, no, with the help of these informations we have to ascertain the value of goodwill under both the methods. Okay, we have to use the super purchase of super profit method as well as the sliding scale method. Okay, so now see, the first of all we will try to solve the problems with the help of this super profit purchase of super profit methods. Only you should know the what's the formula. Okay, and you know that super profit into number of years purchase, as well as you know that how to calculate the super profit also. Okay, for that purpose super profit, the formula is what's average profit minus the normal profit. Okay, and you know that how to calculate the normal profit. The normal profit is what's average capital employed into normal rate of return divided by 100, you will get what's the normal profit. Okay, so average capital what employed, you know that how to calculate. So just we will see now the average profit like this: profit of past years divided by number of years, we will get the average profit. Okay, now see this purchase of super profits method. calculation of average profit. So first of all we have to calculate the average profit. The average profit is equal to what's profits of the past years divided by number of years. Okay, so that these are the 3 years profit, 2,45,000 plus 2,80,000 plus 2,60,500 divided by 3, it's a 2,62,500. It is then the average. Okay, so this is nothing but what's the this is the average profit. Okay, now see the calculation of normal profit. So normal profit is equal to average capital employed into normal rate of return divided by 100. Okay, so the average capital employed is given in the problem. Okay, now see here. So this first sentence, the average capital employed in the business is rupees 15 lakh, 15 lakh 15 lakh 75,000. Okay, so this is the average profit. Okay, so this is the capital employed, and see after calculation this 1,57,005, it is nothing but the normal profit. Okay, so now put into this formula for the calculation of the super profit. So super profit is equal to average profit minus the normal profit. So we ascertain the average profit is 2,62,500 minus normal profit is what, 1,57,500. The remaining amount is what's 1,05,000. Okay, so this put into the valuation of the good for the valuation of goodwill. So super profit into number of years purchase. So 1,05,000, it's the super profit into 3 is equal to what's 3,15,000. So 3 years purchase is given in the problem, so 3,15,000. Okay, so this is nothing but the value of goodwill under the purchase super profit method. Now whatever this information is given, with the help of this information only we have to calculate the B, and B is what's dividing the super profit into 3 divisions and multiplying each of them uh, 3, 2 and 1 respectively under sliding scale valuation method. We have to multiply this. Okay, so B sliding scale method. Okay, so whatever this super profit is, no super profit, this we have to divide by 3. Okay, if it is divided by 3, no, so it will be the average will be the 35,000. Okay, so like this we have to calculate the super sliding scale valuation, division first, second, third, and super profit into number of years purchase. Okay, and goodwill. Okay, so the first for is 35,000 with the multiply 3 respectively it's given. For the first it's a 3 years, for the second it's a 2 years, and for the third it's the 1 year. Okay, so 35 into 3, it's a goodwill is what's 1,05,000. For the second year 35,000 into, for the 2 years it's a 70,000, and for third 35 into 1, it's a 35,000. Okay, the total goodwill is what's 2,10,000. Okay, so this is nothing but what's the total goodwill under the sliding scale valuation method. Okay, so like this we have to calculate the value of goodwill under this method. Okay, so next just see under this super profit method, third method is what's the annuity method of valuation of super profits. Okay, so this, now see what I mean by this method of valuation takes into account in the time or gap between the actual payment of goodwill amount and the actual earning of the super profits in future. Okay, so this is nothing but the annuity method. Okay, so now how to calculate this goodwill is equal to what, super profit into annuity value. Okay, so now super profit into annuity value, so this annuity value is will give them. Okay, so now see with the help of this formula we will ascertain the value of goodwill under this annuity method. Okay, so see this is the problem. The following are the net profits of the Renuka Company Limited after providing for income tax. Okay, after providing income tax. Okay, so focus on this sentence. Okay, for the 2011 it's a 1,05,000, for 2012 it's a 1,19,000, for 2013 it's a 1,33,000, for 2014 it's a 1,26,000, and for 2015 it's a 1,33,000. Okay, so the average capital employed in the business is rupees 10,92,000, on which expected normal rate of return is 10%. So it is also expected that the company would be able to maintain its super profits for the next 5 years. Okay, calculate the value of goodwill of the business on the basis of annuity of super profit, taking in the present value of an equity of rupees for 5 years and 10% interest as rupees 3.78. Okay, so this is the problem. With the help of this problem we have to ascertain the value of goodwill under the what's the annuity method. Okay, first of all, we should know the formula of the value of goodwill. And what is the formula for the value of goodwill? Super profit into annuity value. What is the, we should know the super profit. So super profit is nothing but what's the average profit minus the normal profit. Okay, so average profit also we have to ascertain, as well as the normal profit also we have to ascertain. Okay, and normal profit, how to calculate the average capital employed into normal rate of return divided by 100. Okay, and how to calculate the average profits? The profit of past years divided by number of years. Okay, so first of all we calculate the average profits. Just see here, average profit is equal to profits of the past years number of years. Okay, so here profit is given year wise. Okay, so this 1,05,000 plus 1,19,000 plus 1,33,000 plus 1,26,000 plus 1,33,000 divided by 5. The total is what? 6,60,000 divided by 5. You will get the average profit will be the 1,23,200. Okay, so while this we will use to calculate the super profit. Okay, so now first of all calculate the normal profit. So average capital employed into normal rate of return divided by 100. Okay, so in this problem the average capital employed is given is rupees 10,92,000, and the what's the normal rate of return is given the 10% here. Okay, so now see here, 10,92,000 into 10 divided by 100 is what's the 1,09,200. It is nothing but the normal profits. Now put into the super profit formula. So average profit into normal profits. The average profit we ascertain is rupees 1,23,200 minus 1,09,200 is the normal profits. The remaining amount is what's the 14,000. It's the remaining amount. Okay, so now put into the goodwill formula. So goodwill formula is what's the super profit into annuity value, and the super profit is what's 14,000, and the annuity value is given in the problem is what's 3.78. You will get the value of goodwill is what's 52,920. So this is nothing but the value of goodwill under this super annuity method. Okay, so just see the capitalization of super profit method. So now see this, under this method, the value of goodwill of business is ascertained by capitalizing the amount of super profit at the normal rate of return. Okay, so it means what's the capitalization of super profit method. Okay, so now what's the formula for that? Valuation of the goodwill? The super profit into 100 divided by normal rate of return. Okay, so this is the formula. So now see how to calculate this under this. So this is the problem, and just see this problem, read the carefully. Okay, so read the carefully this problem. Okay, and from the following information respect of the business of a company, calculate the value of goodwill under the 5 years purchase of super profit method, as well as the annuity method of valuation and capitalization of super profit. Okay, the following information is what's the year wise the profit is given. Okay, and the normal rate is 10% is given. Average capital employed is the 6 lakhs is given. Present value of annuity 1 rupee for the 5 years. 10% is rupees 3.78. The profits calculate non-recurring profits on average basis rupees 10,000. Okay, so only what you have to do after getting this average profit, no, you have to minus this non-recurring profits, you will get the average profit. Okay, and this average profit we have to use. Okay, so already all what's the already we solve all the methods problem. Okay, just now just try to solve this method. Only one thing is what's this fifth one, the profit included non-recurring profits on average basis rupees 10,000. After ascertaining the total past year profits divided by number of years, you will get the average profit, and from that average profit you have to minus this 10,000. You will get the total average profit is rupees 1 lakh. Okay, so like this you will get, and then you calculate the using the all the methods under the 5 years purchase method, as well as under annuity method and the capitalization method. Okay, except the scale scaling method. Okay, just try to solve it and just send me the problem solutions. Okay, and if you have any difficulty with this, you can contact me. Okay, so thank you.